Welcome to the 3 Edge Week in Review for the week of December 2nd. I'm Fritz Folts, the Chief Investment Strategist here at 3 Edge, and joining me here once again today is Steve Cucchiaro, CEO and Chief Investment Officer here at 3 Edge Asset Management. Today, Steve and I will discuss cryptocurrency and in particular Bitcoin, which has risen dramatically since last month's election and which this week crossed over the $100,000 mark for the first time. The price of Bitcoin has increased by over 50% since the election, which was a little over a month ago. And so Steve and I will discuss the recent run-up in the price of Bitcoin and whether Bitcoin and other digital assets should now be considered a legitimate mainstream asset class or an outlier. So Steve, let's get started and let's talk about Bitcoin, which is not only up 50% since the election, its price has increased by almost 150% year to date. So why don't we start by discussing what exactly is driving the price of Bitcoin to these recent record highs?
Well, I think there are a few reasons. Let me just start with first. It's very much a trend following market that we've seen and observed Bitcoin for a number of years now. And when it rides higher, that tends to attract more interest and more capital. And it's a self-perpetuating virtuous cycle and often keeps a lot of momentum on the upside and keeps going higher and higher. On the other hand, when it begins to fall, it invites profit taking and selling, and then you get these very big down cycles as well. But lately, it's all been up, especially, as you said, since the election. Second, I would say that there are many large respected firms, institutional firms, that are adopting Bitcoin policies and strategies and are embracing Bitcoin. And this has added some confidence to people that maybe Bitcoin is here to stay. Third, as you mentioned, the election, the incoming administration has been very, very bullish about Bitcoin. And I will say that only a year or two ago, the president-elect came out very much against Bitcoin, and then reversed his position, raised a lot of donations from Bitcoin holders. And now the Bitcoin holders are looking for their payback, and they're getting it in terms of promised deregulation and promised support, talk about a U.S. strategic reserve of Bitcoin. And this has acted to be very bullish and help this positive momentum. Fourth, the president-elect has nominated someone or is about to nominate someone to take over the SEC who is much more favorable regarding regulations around Bitcoin and cryptocurrencies. And then fifth, for some who are skeptical about Bitcoin, they say it's the greater fool theory. Why not buy if you are confident you can sell at a higher price to someone else? So I think all those come into play.
Okay, great. All right, so now let's step back here from all the excitement around the recent run-up in Bitcoin. We know that Bitcoin was created in 2009. It was the first cryptocurrency, and it was also the first known application of blockchain technology. So maybe you could discuss our current view on Bitcoin and digital currencies in terms of the bigger picture in both the short and the longer term.
So if you go back, as you say, back to the beginning, and you read some of the initial objectives of Bitcoin, one of them was to be a form of digital gold, to be a form of store of value that, unlike paper currency, couldn't be printed by the Federal Reserve Board or by a central bank. And yet, unlike gold, it was in digital form. So often it was referred to as digital gold. And because we believe that every portfolio should have a form of money that can't be printed by a central bank or the Federal Reserve, that's why we advocate gold as a very essential part of every portfolio. And so we had to take some interest if Bitcoin was going to replace gold in investors' minds. We had to follow it. So we have spent some time analyzing Bitcoin. And what I would say so far is that it has not resembled a form of digital gold. It's much more resembled a highly speculative stock with lots of volatility. Also, in terms of analyzing the global macroeconomy, we found that Bitcoin is a useful signal of animal spirits, that when animal spirits are running high, when there's excess liquidity in the system, when there's a lot of froth in the market, Bitcoin tends to do very, very well. When Bitcoin sells off, it's a sign that maybe financial conditions are tightening, maybe animal spirits are going away, and maybe it's a signal that one should be careful about other risk assets. So it has acted somewhat as a leading indicator as well.
So, as always, my final question is, based on what we've discussed here today about Bitcoin, about cryptocurrencies, should investors consider owning some amount of Bitcoin among their investable assets? After all, I did read that there is now over $100 billion invested in exchange-traded funds that track digital assets. What are your thoughts here?
So first of all, Bitcoin and other cryptocurrencies are extremely volatile. And rather than providing negative correlation to stocks, they seem hypercorrelated. And so I would say that it certainly shouldn't be viewed as a normal asset class in conjunction of a diversified portfolio, but as a speculation. Now, there are some people who predict that Bitcoin will go from 100,000 to 1 million. And there are others who equally strongly, with great conviction, predict that Bitcoin will go to zero. So I think that people just have to recognize that it's the Wild West and anything could happen. So what we're hearing from some of our clients and what I read about from others is that a common view is, well, gee, Bitcoin might be crazy, but what if it keeps going up? Maybe we would regret not having, say, 1% of our wealth in Bitcoin or even less, but maybe some piece just in case this does continue to rise in value. But then how do you gain exposure without the fear that you're the one that's the greater fool, you're the one that's buying at the top, you're the one that's letting someone sell at a high price, and all of a sudden you lose all your money? So there is interest in maybe modest ways to be exposed to crypto, but without all the downside risks. And so we have responded to that kind of request. And under the auspices of our director of research, Eric Beagleisen, who spent an enormous amount of time building a crypto model, we have a portfolio solution called Crypto Plus. And it allows people to take, say, some small portion of their net worth that they're, can afford to lose, put it in crypto, be exposed to crypto. But the model is designed to try its best to remove itself from the big downswings that crypto often has. And it can adjust the amount in cryptocurrency from 100% all the way down to cash and back and forth as the model changes. So it might be one way to play it safer than just buying Bitcoin directly, and yet still participate somewhat in case this continues to appreciate in value.
All right. Thanks, Steve. It will certainly be interesting to see where Bitcoin and the cryptocurrencies go from here. So that will do it for Steve and me for this week. Eric Beagleisen and I will be back next week with the latest edition of the 3Edge View from the Edge. And as a reminder, all our videos are always available on our 3Edge YouTube channel. And if you know someone who you think might benefit from our weekly videos, please feel free to share them. And in addition, if you find watching our videos to be helpful, please consider subscribing to our 3Edge YouTube channel. We would be most appreciative. So, until next time, on behalf of Steve and everyone here at 3Edge, thanks for listening.